Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to The Money Factor. I'm Richard Naylor, our host. Today's topic is community banking, and I'm very pleased with my guest, Anders Tomson. He's president of Capital Bank, and Vicki Harkins. She's a private banker at Capital Bank. Capital Bank's been around a long time locally, and we've gotten to know some of the people who work there, so we're really happy that you joined us today.
Well, thanks for having us. Good afternoon.
Thank you.
And thanks, Vicki.
Thank you.
I thought we'd start out with a little background on Capital Bank for anybody who didn't know. You know, I've heard about it, about people joining it, and that it's kind of part of our community.
Yep.
But I'm sure there's a lot I don't know, and maybe somebody who doesn't know much.
Well, that's great. Well, first let me say thank you for having us today. It's really wonderful to be here, and we're going to talk today about community banking and certainly a little bit about Capital Bank, which we're always excited to do, so thanks for the opportunity. Capital Bank, I think, is a special place, and it's a institution that's created some 15 years ago. I have worked with the bank for really a very brief time. In retrospect, because Vicki has worked with the bank since its inception.
So that would have been 2010, so like 95?
95, December of 95.
So it's pretty exciting. It was started by local entrepreneurs and businessmen, very respected business people, who really felt the need for a financial institution that had some local sensitivity and focus and would invest back in the community and would see that it could support the businesses and the organizations that make up this great area. And from that it has grown. And it's grown to such a point that within the last actually couple weeks we've partnered with a bank from the southern tier, Chemung Canal Trust, and we're now a much bigger Capital Bank, but still Capital Bank on the same premise. And I don't know, Vicki, if you want to give some perspective on...
Oh, absolutely. Capital Bank has always been about relationships, and it's building relationships with its employees and with its clients and in the community as well. And that's why it's been such a great place to work, and I'm very proud to say that I've been there for 15 years and looking forward to another 15 years.
I do remember the newspaper articles when you were just getting started, and it was kind of impressive to have a bank be born and be succeeding.
Yeah, we're proud. We're proud of the legacy, and we're excited for the future. No doubt about it.
Now, you said it was started by people who recognized a need. So let's talk about what need they saw especially and what services you're now providing.
Well, community banks, I think the backbone of a community bank is its focus, and it's very much in the name. It's focused in the community. So this is where we do business. This is where our employees live and work. This is where the individuals we transact and conduct business with are, and then those are individuals, those are businesses, and those are organizations. And the backbone, the very backbone of our organization is the backbone of that community. It's the main streets, et cetera, and that's how we rise and fall. And the services, we provide a whole breadth of services. Obviously, we take money on deposit either from organizations or individuals and governments, and sometimes, and we also lend that money back out to the businesses to help them grow or relocate, whatever they need to meet their business objectives. So, and in addition to that, we have people like Vicki who work on the private banking and wealth management side. I don't know if you want to.
Well, the wealth management side is a whole new area that has been brought to Capital Bank, and we're very excited to add those new services. So what it allows us to do is expand those relationships that we have and really be a one-stop shop for our clients and be able to take care of all of their needs, whatever they might be. It might be some investment needs, it could still be a commercial loan, it might be a trust need, but we now have those services.
So there's some estate help with estates?
Estate planning and trust planning and administration, yes.
Okay.
Tax services. So really when you look at it, we can provide a full breadth of services for the business people and for businesses to grow. We provide a full breadth of services for the individual, be they mortgages or auto loans or consumers. And now through the wealth management and the private banking, another whole array of services, be it retirement planning or other, really fundamental financial needs of an individual.
Awesome.
Oh, it's great.
Now you mentioned Chemung.
Mm-hmm.
What is the second name?
Chemung Canal Trust Company.
Chemung Canal Trust Company. It doesn't flow quite as easily, but I know the county, and it certainly has a name, but I'm glad you kept Capital Bank locally.
Well, we're proud of Capital Bank, and Capital Bank is relevant and is part of our DNA. And a lot of, it was important, one, because this is a partnership. And the partnership has validated the fact that the premise that Capital Bank was founded is the premise of which we'll go forward. And this is the model. It's supporting our Capital Region community. And we're very excited about all that Chemung Canal Trust does for us. A fantastic company. It's the oldest independent bank in New York State.
I didn't know that.
Yeah, nearly 180 years. Really a tremendous tradition of doing good service and good deeds.
And they were located primarily where? In Chemung County, obviously.
Yeah, I was based in Elmira and operate in 7 counties, including Pennsylvania. So really we almost look at our market areas upstate New York now more so than Capital Region or the Southern Tier. But yeah, that very, very, very fine company and with great individuals and a legacy of investing in their community as well. And I think when they saw Capital Bank, they saw a couple things. They saw the infrastructure we had. They saw kind of a unity of purpose and a common mission that they shared. And then they saw a need for Capital Bank to grow and to create more services. And for Capital Bank to really achieve its goals, we really needed that marriage because that allowed us to do so much more. I'll just give you a quick example. If a business came to us and wanted a loan, at Capital Bank, we may have been restricted because of our size to provide a loan of up to $2.5 million. And that's an awful lot of money.
Well,
right?
for a lot of people, that sounds like a tremendous amount.
It's a tremendous amount of money. But a lot of businesses need more, and real estate needs more, and in order for businesses to grow. And it was very hard for us. We could nurture and grow with the company, but it got to a certain point, and they would outgrow us. With our relationship with Chemung, that legal lending limit goes up to nearly $18 million. So we can obviously do, and that gives you some idea of the scale and how powerful that can be. And we're no longer seeing, that small business growing to a mid-sized business and then saying, you know what, now we can no longer, thank you very much. Now we have the whole
You've got us this far, but I need someone else to take us
so
the next.
that's very exciting. But it allows us to do more, but it's not something that we're going to do differently. We're going to create that same kind of relationship-focused model and just apply it on a little bigger scale.
Now, do you have any special focus, or are you pretty balanced across those services, whether you're a private individual or a family, or whether you're a business, or?
Well, I would answer that a couple ways, and I'd be very interested to hear what Vicki has to say, because she deals with individuals every day. I think our special focus is the relationships we have. And so whether it's a company or an individual, what are their needs today and how can we work with them to achieve those needs? So that's our special focus. I think one thing that's unique about our company is the assets under management in the wealth management group, in the trust department, et cetera, are as big as the bank. So that's somewhat different. That's somewhat,
some confidence there.
Yeah, that's somewhat, and that's the longevity that we've had in the market. That's the trust we've earned, and that's supporting families generationally more than one after the other. But really, it's about every individual. So what is the specialty? The specialty is what that person needs to meet their goals. That truly is the specialty, and that's what I think we do best. And I think that's what community bankers do best. It's very, very much a relationship
So you'd
focus.
really rather focus on the relationship and what those needs are, and then that's where you want to put your energy.
It's very simple. Mm-hmm. Banking, I think, is a very, very simple business because it's about knowing people on an individual level, having a direct relationship with them and understanding their needs, and not just how they look on paper, but what's their true character and capacity, and what's their history, and how do you work with them to find financial solutions that work. Not that they need more money, but they need an appropriate amount to achieve their goals.
How do you define community banking? Maybe it's a silly question, but at what point is something not a community bank, or is there some rule of thumb?
There are rules of thumb.
It seems like we're wealthy in this community that we do have community banks. You walk around New York City and you see Chase and Citi.
They may be the community banks in New York City, right?
Right.
So I think that it's been the regulators would define it as $10 billion in assets or less as a community bank, and I think 10 to 50 or might be a regional bank, and et cetera. So you get up to the Chases and the Citibanks and
pretty quickly
the clearinghouse banks. We're fortunate, and we're fortunate that we have opportunities, and we have tremendous colleagues in our community, and I think we as a group do a good job at supporting the businesses and individuals. So what makes community banking different is it's pretty simple. It's asset size that we just talked about, but really it's a whole philosophy of I'm going to gather my deposits locally, and I'm going to reinvest them locally in loans and other format. And as opposed to looking across a broad spectrum of a footprint and saying, where can I get the best yield? Where can I maximize the most profit at any given time? That's where I'm going to take my capital and put it. That's not what a community bank does. A community bank, we rise and fall based upon kind of the main streets of where we do business. This is all we do. So we're 100% entrenched in this geographic area, and supporting the communities and the people and the families. That's what makes us grow. And as the community grows, as the families grow, so too do we. And so it's not always about making a decision that's minute to minute or quarter to quarter, or what did the stock analysts say about me today. That's not what's driving our decisions. What's driving our decision is how do we integrate in a very real way into this community so that we can all benefit.
Sounds good. I think a lot of large companies' presidents would love to be able to say that, but their shareholders seem to be looking for huge returns and more interested in the quarter. So in your case, you're able to do that.
Well, we're able to do that. Not that we don't make a profit, we do. Not that we're not sound business people, we are. And if you looked at the value of our company stock against the S&P or bank index, you'd find that our model has outperformed those.
Awesome.
Now, why is that? I don't know, I'm not that smart to tell you why. But I can tell you that
it doesn't matter.
It's validated itself over generations. And there's a lot of financial strength in a community bank, and there's a lot of financial strength in this recognition of relationship. I think relationship-based lending in business it seems simple, but people get away from it. And you need to know the core fundamentals of the people you're doing business with in order for you to be successful. And that's the basis of a community bank, and that's why we're ultimately successful, and that's why we're making sound investments in our community. So you've seen a lot of stories lately about people changing their lending models and putting money here or there. At a community bank and a capital bank, it's been consistent. We're continuing to do business the way we've always done. We're looking at sound individuals. We're making good investments in our community. And we haven't been forced to change because our model has been working. It's actually, we're coming through this recession, and we're making the same decisions we always made. We're making the same investments we've always made. And we're feeling better and better about it every day.
Let's go into that a little more.
Sure.
The recession.
Okay.
We heard, meaning you get it from every magazine you look at, the websites, TV, MSNBC, whatever. Banks have money and they're not lending. I can't get a loan as a business person unless I show them that I don't need the money. I've heard that's been the joke from some business people.
Right.
How has the recession affected Capital Bank, and how have you been able to cope with the externalities of all that?
Well, you do need to cope with it, and it has affected us. And so what has it done? I think there's two sides of a ledger. There's the folks who have the money who give the credit, and the people who have to put up, who have to borrow the money. And what do you need to do to borrow the money? Well, you need the entrepreneurial initiative to do that, which requires capital of your own. It requires a market to execute your business in, and it requires you to provide promises to repay, guarantees. That oftentimes, in a small business, that's someone's whole livelihood. They put a lot on the line.
And their whole life.
It's their whole life, right? So we need both of those to come together. So people focus a lot right now on the credit side of the ledger, but you need both. And I would argue probably that there's a lot of capacity to lend right now. There's a lot of banks out there who would be excited to lend money today, and it's the demand side, the entrepreneurial side, that hasn't caught up to the capital side. That's what I feel. And I look at the terms and conditions within which we lend money, and they're really no different. They're really no different. I mean, they're sound. We're a very conservative model. We make sound business decisions. We partner with people over a long period of time. But we need the growth to occur too. So we need the underlying fundamentals of our economy to work. Now that's true in the community banking model. I think on the bigger scale, on the bigger scale, probably money has decreased. But I know that the money center banks and the large regional banks are looking to lend money, but in their way, they also have seen a lack of demand, so they're challenged as well.
And that's interesting because much of this started, at least we were told, it started with lending to people who probably were not good risks.
Not appropriate risks for the money.
Right.
Yeah, you need to repay the money. It's kind of fundamental to borrowing the money.
Right.
And also to lending the money, understanding if the person can repay it. And they were loans based upon models that saw growth trends continuing and certain practices that, in retrospect, were not prudent. And so there was a time when, the community was awash in money, and there was easy money, and people were buying houses they shouldn't afford, and driving cars, and flipping houses, and finding the next person, and it became like musical chairs, right? Well, I'll keep doing it until the music stops, and then the music stops, and then who's got the chair?
Right.
And that's a problem, right? That didn't happen as much in upstate New York. You can look at communities in Florida, or you can look at communities in Las Vegas or Arizona or California, that these kind of traditional high growth markets that had a lot of speculative money. We did not. We're benefited in our markets by saying there was not a lot of speculation.
Maybe that's because of community banking.
It's because of community banking. I think it's a conservative business community, and there's strong support. Were there some bad decisions? I'm sure there were, and we've all made them. And I'm always happy when it's not my turn to make that bad decision. But I think if I look across our landscape, our communities did not suffer the way some of the other communities have and still are, and I think we'll be stronger for it.
So in terms of foreclosures, I guess we've heard that there have been above average foreclosures here, but it's not been anywhere near what we've seen in other parts of the country.
That's true. You get discouraged. It's easy to get discouraged with some financial news, and I'd be curious to hear what Vicki thinks about it. But I think the thing about a recovery to realize is we are recovering, but there's going to be wins and losses. We're going to go up, we're going to go down. We're going to get, on one hand, we'll get a good jobs report, or an unemployment has gone down. On the next day, we say, well, geez, our region didn't fare as well as it could have against other metropolitan areas. And the housing market's been very challenged lately, right? And that's been a very slow recovery. But I think what you got to look at is on the foreclosures, it's challenging because those are families struggling, and you have a fair amount of empathy to say, these are tough times for these families, and they need to gather themselves together and put their resources together and communicate in a way that they can get through this. And I think now is the time to reach out to your financial partners and try and find solutions, because the thing about a foreclosure is you're all in it together. Everybody's losing money. The family suffers.
The banks lose what? At least 20%.
The banks lose money. Everybody's losing money. No one wins. There are no winners.
And the whole value of the property goes down.
Yeah, it's very challenging on everything, and on neighbors, and everybody. So, I think what you need to do is gather the resources, communicate early. People get through this. People can get through a foreclosure process or a troubled financial situation, and the way they do it is by one, communicating and coming to grips with what they need to do.
So, Vicki, what do you think about?
Well, I agree with Anders. It's all about communication, and you really need to reach out to your banker and have that talk with them and let them know what's going on, and then you work out a plan so that you get through it and the bank gets through it, and you do it together, and it's a partnership. And it comes back to the relationship, and it comes back to knowing your clients and our clients knowing us as the bankers, and that's important.
That fits really well with community banking, because as you're saying, tell your banker. You don't want to wait, because the more you wait, the more difficult everything becomes, correct?
Correct, right.
So the more you can project ahead and say, these numbers don't add up, the better chance you have of rearranging things.
Right. The sooner we can put a plan together to help everyone get through it.
But now is better than later.
Absolutely.
So even if you've waited, don't wait any
Don't wait
more.
any longer.
Yeah. Right. Tomorrow's a new day. So the sooner you move on the plan, the sooner you'll get past it and on to stronger footing.
I want to touch on one more kind of macro issue before we go back into details. Regulatory-wise, people were screaming for, if not somebody's head, at least, why don't we have some new rules? We need to control these people for making bad decisions.
Yes.
How has that affected your bank? Have there been regulations that have come down, either make life better, worse, or just more interesting?
Well, I don't know if it's interesting. I don't know if regulation's interesting. There's definitely more of it. A couple things I'd point out. One, regulation is a good thing, right? So the question is, how do you have balance, and has the regulation achieve the objectives that we as a community needed to achieve so the outcomes aren't repeated, or that we're a little bit protected? That's what the challenging thing for the regulators is, to devise a system that doesn't have unintended consequences, or that have limited unintended consequences that don't stifle components that you don't want to stifle. So there is a tremendous amount of new regulation, and we could talk about Dodd-Frank or this or that, but it's 10,000 pages or whatever it is. We're not going to. I don't think you want to talk about it. But what's hard about the community banker side of the ledger is that it's easy to say that the community banks didn't participate and didn't
create this problem.
Didn't create this problem. This was not it was the financial sector that created the problem, and there are components of it, but it wasn't a community banking problem.
Yeah, I listened to these New York people talking about tranches and young financiers, and they knew everything. I'm just an old librarian. What do I know? But I didn't cause this big problem.
Well, you didn't.
With all my tranches.
And you don't. And people suffer real losses, and too big to fail, and all that stuff is very, very challenging. But the regulations that come forth, all the banks have to participate in them. So whether you're a community bank or a money center bank, we're all challenged, and the resources that a bank has are limited in a community bank sense to deal with these regulations. So every regulation that comes on is a new challenge for us to manage, and oftentimes you're managing to the regulation, but the outcomes aren't changing, because the outcomes aren't intended to impact us. However, the impact is on the whole regulatory process, the resources that are required to manage that.
So it's expensive. It can be expensive.
It's a tremendous burden, and that's going to force some consolidation.
And then we all pay more.
Yeah, so you need a critical balance. Well, yes, they'll all pay more. No, we all pay more, and that'll impact credit for sure.
In terms of efficiency, I imagine if you put a regulation on that slows things down and makes it difficult to achieve something, that doesn't just bother you in terms of the efforts you have to go through, but it can involve the length of time it takes a business to get their money.
Yeah, it's frustrating.
Or a person.
It's frustrating because certainly it's easy for me to say I was uninvolved. But certainly the business community and the businesses we deal with would even be further afield and say, well, it had clearly nothing to do. Why does it take? I've paid all my bills all the time. I am a good person to do business with. Why should I be treated differently? And that's a tough thing to explain. That's a tough thing to explain, but it's something we have to do, and I think we have a shared responsibility to get it right. And you know, these situations get better when government and the regulators work very closely with the private sector, and hopefully we'll develop a system that protects us in the future, but allows us the ability to continue to grow and invest in these communities.
Without horrible unintended consequences.
Yeah, I'm confident about it. I am. We'll figure it out.
Let's talk about some kind of nuts and bolts things.
Sure.
Somebody comes to you and they want a mortgage.
Mm-hmm.
What do you say to them? How do you guide them? I remember as I was a child and my parents would talk about mortgages, and people were concerned about how do I get enough for a down payment?
Mm-hmm.
You know, and we got to the opposite extreme where you don't need a down payment. You're good. You'll pay us back.
Yeah.
Where are we today? How do you advise people looking for a mortgage, whether it's commercial or let's do both?
Okay. Do you want to talk a little bit about the residential mortgage side? Or?
Residential mortgage, sure. Well, we would have our clients come in and they would bring in some of their financial information the last couple of years, and you know, we sit down and work through the process with them as what can they afford to pay back and what works within their budget. So
are the guidelines similar? Like they used to say, what, 1/4 of your pay, or I forgot what it was.
You know, that would be difficult for me to answer. I'm not really sure. I don't know.
Yeah, it's a third of your pay.
A third,
typically.
Okay. The old
30%.
rule of thumb.
But I think those rule of thumb still apply. And you know, you probably want to look at traditional mortgage schedules as opposed to more aggressive mortgage schedules, such as what if I didn't pay anything for the first 2 years, but it went, you know, those things that presume that people's income would continue to grow or that people's housing values would, that's where the problems occurred.
That's speculative, isn't it?
Well, yes, it was. Right. And
I didn't mean to interrupt you, though. You were on.
No, that's okay.
So Vicki's very right, though, and she knows, but she deals with these people day to day. But so it's taking a more of a practical approach. What can you afford? And you know, what I like to do personally, and what we try to do at Capital Bank is we try not to be formula driven. We try not to say, okay, you can do a third of this or that. Do we have to do some of that? Of course we do. Of course we do. But every person's different. You know, whether you have 2 cars that you lease or 1 car that you own, or maybe you ride the bus, or maybe that, I don't know. But every individual is a different decision. And it's really kind of the partnership of finding, okay, what's the right decision? And not trying to presume these other overarching rules to say, oh, well, that applies to everyone can afford a third. Well, you know, the reality is some can, some can't.
Some might do better.
And how do you define what a mortgage costs? You know, is it do you base it on 1% interest that you're going to pay for 2 years and then it's going to go, or is it a normal schedule that's reasonable? And so there's all sorts of ways to manipulate formulas. It really, I think, to the people out there, my recommendation would be to develop a plan that's comfortable. Make one that you feel very good about. Yes, you're going to have to put down some money, and there's different levels to where you are, whether you're a first-time home buyer. There's all sorts of special programs out there to assist people to buy their first home or to get into a home.
So then before they start thinking, I need 15% or 10%, they should come and talk to you.
Oh, no doubt.
Oh, absolutely. It comes back to communicating with your banker, quite honestly.
And I think
Right.
if you're buying a house, I think you should know what you can afford before you're out knocking on doors saying, boy, I really like this house. I wonder if I can afford it. You know, really partner with your banker and find out what you can afford. And that'll give you some experience and some confidence to go out and say, you know what, this is a home that works for our family.
Anything you want to add to that?
No, I think you summed it up quite nicely. It's
So,
really
so they bring their
communicating
papers in, you discuss their whole situation, and you can't really do that so well without meeting them and finding out if
Right.
they have a huge family to support and they've been out of work 3 out of the past 15 years because of whatever.
Well, each situation is going to be different. So it's finding out what is it that they can afford, what kind of lifestyle do they have, and what do they want to continue to have, and seeing what programs are out there that could fit each individual.
What
And
about
it's gonna
these
be
scores?
different.
Does that affect, how does that play out today? You know, we hear so much about a credit score.
It's just part of the picture. It's not the whole picture. So, you know, it's a puzzle that we're putting together, and that's some of the pieces that belong into it.
Well, you know, a credit score, no doubt you have to have proportional credit to what you can pay for, and you have to have a history of paying the bills that you've taken on. And in that are financial numbers and this and that. We could talk and dissect it. But really, if you have a level of credit that's appropriate for your level of income, and you're responsible with that credit, then in all likelihood you're qualified for a mortgage at some level. But you know, I wanted to touch on one thing that Vicki brought up, which I think hits an essential point of a community banking philosophy, and what we pride ourselves at Capital Bank is people coming to us early. If you're a homeowner or want to be a homeowner, if you're a business or you want to start a business, if you need to prepare for the future in your retirement, or if you want to buy a car, whatever that is, come and see us, and come see the bankers who you know and trust, and develop a plan early on that works. And that's true whether, you know, we talked about big numbers before, $18 million, $15 million, $10 million. Absolutely. Those are the people we want to talk to, but we also want to talk to the person buying their first home and coming to us and say, you know, what can I afford? What can I do? And it's really the same approach, whether, you know, it's the same fundamental core business approach, understanding the person's character, understanding their financial condition, working with them on their business plan, understanding what they want to achieve, and then what we can invest with them to make it happen. It's very, very simple. And it's when you deviate from the simple practices that I think the bigger problems occur.
That sounds so much more sensible than some of these ideas I've heard where you're recommended to get your credit score up by doing something which really doesn't have anything to do with how good you're going to be over the next 30 years of paying off the mortgage. You know, I should have 3 credit cards, and I should use something on each one every 4th month. You know, even though I'm a person who's never not paid my bills with cash. You know, you go in and you pay your car off with cash, and I don't need a credit card because I pay everything. That person wouldn't have this credit score unless they had. You know, it sounds
I'm
silly.
sure there's ways to make your credit score better, right? And I'm sure there's thoughts like that you have, like I should have so much and I pay this way or that. But I think what you want to do is have proportional amount of credit and pay your bills, and from that you'll develop a good credit history. And sometimes it takes time. Sometimes you got to justify yourself, and sometimes you got to rebuild yourself. And when you're in that rebuilding mode, like maybe you're talking about, those people say, hey, you got to rebuild your credit. Though that's a different story, and maybe you do need to talk to people about, okay, well, I've had this trouble, I've had a problem. How do I rebuild my credit? Well, that's something that you need to start to think about too. Maybe that's a step that you need to take before you buy your next house.
Now, does somebody like that have access to professional expertise? Because even with the loan, I imagine that somebody might think, well, they don't really want to see me yet. They want to make money off of me. They don't want to see me yet, so I need to do more before I go to the bank. Whereas everything I'm hearing from you is, come and talk to us, because we're going to help you figure out how to get through the whole process.
Yeah. We want to invest in the relationship. And we want to invest up front in that relationship. So that's using our resources. And what are those? Sometimes it's money, but oftentimes it's advice and counsel. And sometimes it's a sounding board and just talking through it. That happens to the person walking on off the street who wants to buy a car or a home or whatever, put their children through college, whatever that strategy is. And it happens to the business people too. We want to invest in the relationship. And that's what's important to us. And we're not telling people they need to make a sale today. We're telling people that we need to understand the people we do business with. That's really when I talk to professionals like Vicki, that's really what the questions I'm asking first. Who are we doing business with? Tell me what they're all about. And that's really where it starts, and that's why Vicki's exceptional at what she does, because she understands that basic premise.
So to finish up, let's do some real basic things. We have the person who I don't know, maybe they're 8 years old and they're saving a quarter, but that's not really where I wanted to focus.
Good for them. Good.
Just an everyday person, and they need a checking account, and they need financial advice on how to go through their life a little better and meet their goals. And then all through the wealth management phase, where now they've gotten to the point where they can project a certain cash flow and need to know what to do with it. We can start with checking, and then let's move on up to the upper level. Anything new with checking? Interest-free? Interest-free is often the case. I meant it doesn't cost anything to do checking, that kind of thing.
I don't know, what would you say? What do you think's new in the world
Well,
of checking
we
accounts?
have a wide range of products, but we actually have a new product. It's our global checking, which will allow you to bank, as it says, globally anywhere around the world with no fees. So all of our ATMs, some requirements, we want you to have direct deposit, but free checks, no fee on the ATM, some reduced fees on consumer loans, some increased rates on a CD. So that's a really nice product that we're excited about.
So if I'm on vacation in Paris and I go to the ATM, no fee.
No
The
fee.
Paribas,
No fee.
If I'm at the
Banque
royal
Nationale de
wedding,
Paris,
that's right. When I'm at the royal wedding, I'm seeing
and
that
you need
first
a new
kiss,
That's
suit
right.
because
I'm
this
going to
is-
need a sword.
Oh,
I'm going to need something to fit in. But yeah.
so you just go down to that ATM and
You can go to that
That's
ATM.
nice.
Absolutely.
I think it's a nice
We're
product.
excited about that.
It's a nice product.
I just mentioned checking accounts because people who live almost hand to mouth, and sometimes they're even cashing in their paychecks and taking horrible losses on them. I feel very sorry for them. They need to be at a bank, right?
I think so. I think there's a lot of check cashing and instant rebates and all sorts of things that sound too good to be true. Maybe they are. Maybe they are. So I would caution you to look at the true cost of that. And there's people out there who can help you figure that out when you do need the help. But look at the true cost. The earliest money and the easiest money is not always the best thing for you and your family. Sometimes it is. And, what we want to do is we want people to be informed. So maybe that check cashing is right for that person. And maybe it's not right to be at Capital Bank. But when they're making that decision, I want them at least to have the benefit of a total transparency of what doing business at Capital Bank means and how it's going to impact them and what the costs are. And then they can make an informed decision as what's best for them and their family. And so that's what we're shooting for. And I think about that more so than I think about what are those other guys doing or how could they do that. But yeah, to the family out there, I would say if it sounds too good to be true, maybe it is. But just try and, it's not hard to figure out the costs, to invest the extra time. Don't be intimidated by the process. Don't be intimidated by interest rates or the math of it all. Sit down and try and figure it out, and I bet you could, and figure out what's best for you. And from there, I think you'll make some sound decisions.
Well, and if you come in, we'll help you do that. We'll go through that process with you, and we'll evaluate the accounts and what's best for your situation. It's going to be different for each person.
And I think it's so important that people do have that conversation.
Absolutely.
Let's move up the food chain a little bit and talk about the person who has done that. They're putting their money away. What is wealth management, and how do you manage it?
Well, wealth management is a whole array of different products and services that we have that include investment services, as we talked about the trust and estate planning, retirement services to help you with a 401, a small company. We can put that in place for you.
So whether you're an employee or a business?
Correct. And we've got brokerage services and tax services as well. So we can help you with your tax returns. So we really, we can do it all.
Yeah, it's interesting to me the level of sophistication at a local institution, at a local community bank that you can have. And we talked earlier about the funds under management at our institution being greater than the actual asset size of the bank. This is something we do pretty well, and I think you'll find that some other institutions do it well as well. And what we like to say is, hey, we can serve the needs of the consumer, like we were talking about, and we can serve the needs of the business, but we can also serve the needs of the executive. So as they develop and they're looking to develop more plans about how they're going to gather wealth and retain wealth, we can be a partner with them as well.
Is there a rule of thumb of how much money you should have before you ask for help with wealth management, or?
No, because it could be a large company, it can be an individual. As Andrew said, it could just be an individual who might be rolling over an IRA or 401 plan from leaving one organization, moving to another, and we're happy to help with that. So it depends on the individual, and we're happy to sit and talk with them. Again, we come in and sit down and talk with us, and let's talk about what's going on in your life financially and see how we can help you.
You know, that's one thing. I think a couple trends that we see is that companies are having a hard time maintaining defined benefit pension plans.
Oh, yeah.
And you're seeing more portable investment vehicles for retirement plans, 401k, 403b, whatever the number is. And you know, a lot of times those are managed by company-sponsored plans. But when you change companies, as happens more often now than it did perhaps in my father's lifetime, you need to figure out a plan how to manage those accounts. So the concept of rolling over retirement funds is a very significant decision that someone's going to make. And oftentimes, since we're talking about their retirement, I mean, these are substantial assets, especially when you talk about they're substantial to that person. They're all kind of in the same proportion. That's what they're planning to live on at some point. And so these are very important decisions. And I think so that concept of do I talk to a wealth manager or when should that happen? These decisions impact a tremendous number of people. And the more that this retirement planning gets pushed back to the individual, the more they'll be forced to manage it appropriately.
That seems like great advice. I mean, as you said that, I can just imagine this is your, maybe it's only 1/3 of the, as they used to say, a three-legged stool.
Yeah.
But a stool with two legs,
It's hard to sit on. That's very uncomfortable.
yeah. I want to thank you very much for being on the
Thank
show.
you.
This has been great.
Thank you.
Well, thank you for having us. We really, really appreciate it, and we're excited to be here and excited to be part of the Capital Region for sure.
And we just hope that people ask, whether it's Capital Bank or another bank, just ask them.
Please do. Yep, a lot of great people out there.
Thank you.
Thank you, sir.
Thanks.
Yep.
And I want to thank you for watching. I hope you enjoyed the show, that you tune in again next time, and that you have a great week. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.